because of the levels of inflation that we've had, yeah, I mean, the amounts of money that it takes to keep a business cash flowing are changing.
Yeah.
So, of course, I've worked for a couple of banks, and I can only speak to my experience, but I
Right.
think I can speak fairly generally about the process
Yeah.
when you apply for a loan.
Yeah.
So just to start with, in terms of the perspective of a bank when they're giving a loan, of course they're happy to have the business, but of course the key thing in the back of your mind is, I've taken deposits from these customers on one side, and then my job is to be an intermediary who then takes that money and
Right.
gives it to someone else who needs it for their business.
Yeah.
However, if that loan goes bad,
I'm responsible for it.
I'm responsible, we lose this money,
Yeah.
and that's depositors' money, so
Right.
we need to put that back.
Right.
And that's why banks need to be heavily capitalized,
Mm-hmm.
because if the loan goes bad, it needs to come out of the bank's capital, not depositors' funds.
Right.
So we spend a lot of time looking at liquidity and looking at capital and all these sorts of things.
Mm.
So although we all complain about how much money banks make, if they
Mm-hmm.
make profits, that builds up their capital, which makes them more stable and stronger. So if something does go wrong,
Right.
banks will survive. So it's a good thing if your banks are healthy.
Yeah.
The only thing worse than banks making money is banks losing money, because then it becomes a big problem for everybody.
Yeah.
So that's a good thing. So the bank is looking at it in terms of what are the risks on this loan. So they'll often say you need to deposit with the bank for 3 months or 6 months or a year before they're willing to give you a loan. And that's
Okay.
usually because they want to see how much money is coming in and out of your account. And that will guide them on what you can afford in terms of monthly
Yeah.
installments.
Yeah.
They'll ask you for your financials for your business for the same reason. They want to understand your liquidity, your growth, your profitability, looking at the type of business you do.
Yeah.
They'll want to know which risks you're exposed to. Do you have competition who'll take all your customers? Is your business entirely dependent on one or two customers who might decide to leave you? If you're an importer, how are you managing with the forex situation in the country?
Yeah.
If you have very thin margins and interest rates go up or something like that, will you be able to manage, and so on?
Yeah.
And then really the question of how much of a loan should this customer get is going
Yeah.
to depend on the specifics of the business. Like,
Yeah.
what does the customer need the loan for? What are they going to do with it?
Yeah.
And what are their financials in
Yeah.
terms of capacity to borrow?
Yeah.
You'll sometimes have cases where a customer wants to borrow for 2 years, but you think it'll put them under a lot of pressure in terms of the monthly installments, and you tell them to borrow for a little bit longer so that the
Yeah.
installments are smaller.
Yeah.
Or you tell them to borrow a little bit less so that
Yeah.
it's easier to manage.
Yeah.
And then there's also the question of what is the customer borrowing for. If they have a business that's working really well and they want
Yeah.
to borrow for that, for working capital, that's usually fine.
Yeah.
But then if they say, now I want to do something different that I haven't done before, and I
Yeah.
don't have expertise,
Yeah.
but I want you to help me fund that, the bank might actually be reluctant because they're not sure about how that will work.
Right.
And then they'll be looking at the core business to see if that has enough capacity to
cover it, yeah.
absorb a failing extra diversification strategy or whatever it is you're doing. So all those things are sort of being considered. So if a bank says we're turning down the loan,
Yeah.
or sometimes it'll be, I don't know, quite often it's if there's one particular issue with the customer, that'll be something that comes up.
Yeah.
So it might be, like I say, it might be that they're borrowing a lot
Yeah.
for how the business is performing,
Yeah.
and you don't want them to be under pressure.
Yeah.
It might be, as a backstop, if the loan doesn't work out, you might want collateral,
Yeah.
depending on the product type.
Yeah.
And then you might say, the collateral on offer is
Yeah.
not going to be enough to cover this loan if something goes wrong.
Yeah.
So those can be issues. So sometimes you go back to the customer and say, we need more collateral. But you were talking about the transparency of banks in terms of communication around these things. So
Yeah.
it's tricky. It depends on, I don't know what the experience is that you're referring to. I think banks will be chasing customers in the next year or so.
Well, let's hope so, because
yeah, that might be the direction, because I think, there's a lot of, if the government continues to control their borrowing,
Yeah.
then, the money that the government isn't borrowing needs to go somewhere. So,
Yeah.
then banks need to focus more on their customers. I think one thing that's a huge difference between our culture and our history compared to what you see in other countries
Yes.
is, I think in a lot of other countries, you have quite sophisticated credit scoring. So everything you do in terms of wherever you owe money, whether it's paying your bills, whether it's loans you've taken, whether it's credit cards, all of this is tied to your let's say your national ID feeding into an assessment of how creditworthy you are.
Yeah.
You're talking about the American experience and borrowing in America, so I assume you had a credit score.
Mm-hmm.
Yeah. So then we don't have that here. What we have at this point, which is progress from where we were before, is all of your loans go to the Credit Reference Bureau, or bureaus. There are a couple of them. So then if banks submit data on all their borrowers, so do the microfinance institutions.
Okay.
I think the Higher Education Loans Board, I think, are also joining this as well.
Okay.
So because they see that there's an issue with credit culture about student loans. So then now if there's a consequence to your ability to borrow from a bank, for example,
then
people
more
are more likely to pay. So that's a good process, because now it's like if somebody has a bad loan at another bank and they come to borrow from my bank, I run their credit check and I can see that loan.
Yeah.
However, if they have a history of being a bad payer, but right now they don't have any loans elsewhere, I wouldn't know that.
Okay.
So if you have credit scoring, then you can track someone through time, which motivates all of us to have good credit scores and to pay off our loans.
Yeah.
So then it becomes easier to give people unsecured loans and those sorts of things.
Yeah.
And also to take a risk on people on the basis of how they've performed with their credit previously. Whereas, you'll accept this, right? When we talk honestly about our credit culture, if you give someone a loan, even a personal loan, not like as a bank, but as a person, there are some people who just, will take it as I have a responsibility to pay this person back. And other people who say if there isn't collateral involved, I've just got some free money.
Free money, yeah.
So that aspect is tricky to manage.
Yeah.
I think that can have an impact in terms of startups. I guess if you have collateral, it's not as bad.
Yeah.
But the other thing we have is our economy versus the American economy is very, very different in terms of it's a lot harder here to make something work, right?
Yeah.
As we're talking about, interest rates are very high, inflation is very high, there's no forex.
Yeah.
It's hard to find investors.
Yeah.
People don't have as much money, so even if you have a good product, you might still struggle to sell it.
Right.
All these things make it more difficult to have a successful business here.
Right.
And it's not easy to have a successful business in America either.
Yeah. Yeah.
And then there's also an issue of diversification. If you look at an American bank that could have millions and millions of customers, if they're giving a relatively small loan to you as a startup investor, then maybe they can take that as, a small hit if it doesn't work out.
Yeah.
Of course, if you're a small customer for a Malawian bank, that still counts to a degree, but our banks are not going to be as big as a Bank of America or something like that.
Yeah.
That could be a factor. I don't know. I don't mean to just be giving excuses. I think, though, with startups, there's... I think with some of the banks, they actually have development banking facilities or subsidiaries. Like with National Bank, I know they have one that's separate from the rest of the business.
Yeah.
And there, I think they'll have a focus maybe on some of these companies. I hope.
Yeah.
You see a lot of products within the banks now for female entrepreneurs in particular, or youth-led entrepreneurs.
Yeah.
And you see banks getting credit facilities from other institutions where they have risk-sharing guarantees and things like this.
Yeah.
So that if something goes bad with the portfolio, it's a riskier type of lending to do.
Yeah.
So you get other institutions to come in and help support you in giving those loans and share the risk with you. So that you can contribute to, growing that side of the economy.
Yeah.
But I don't think there's enough capacity at the moment. There's not enough focus on it yet for it to really feel like for every SME or every borrower that there's an option there.
Yeah.
So I'll acknowledge when you go to your bank, if you're a startup, it might be difficult.
Yeah.
I think traditionally, though, I might be wrong, but even in America, I think traditionally, as a startup, it probably makes more sense to be looking for angel investors or something like that, than to be looking for loans from the bank at 30%.
Yeah.
We do have, not loads of them, but we do have people with the resources to invest in businesses. I just don't think we have formalized structures where you can see these people are interested in these types of businesses.
Yeah.
And you don't see people setting up funds that are, that are clearly communicated about,
Right,
so that
yeah.
they're searching for opportunities in the economy. So it'll be more like, this person knows that guy who knows that guy who's starting a business,
Yeah.
and then they end up, supporting each other. So that's another thing. But I don't feel like startups is traditional banking business.
Yeah.
But I can see that some of the banks are setting aside fund resources towards it. But it's high risk for banks.
Right.
Because really, usually you're lending against, usually either if it's a personal loan, like the best products we have probably are mostly for individuals, like consumers, as opposed to businesses, right?
Yeah.
The best products we have are usually salary-linked loans.
Yeah.
Because we know
Yeah.
exactly how much is coming into the account every month, so we know how much this person can manage to pay.
Yeah.
And then it's a straightforward transaction. So if you're getting a loan for your car or your house, or even if it's just for your normal whatever it is,
Okay.
it's quite straightforward. If you're looking at a business, again, you get the financials from the business.
Yeah.
You review those financials, and then on the basis of how these guys perform and what their cash flow is, this is what they can manage. And this is the bank looking out for your interest as well as for the bank's interest.
Right, exactly. Yeah.
So then if it's a startup, then it's just, we're just praying that it's going to work out. Money that we're lending is not our money, it's the depositor's money. So the risk that we take needs to be a managed risk.
Yeah.
Because if you're the depositor and we lose all your money lending to startups, you'll be saying, why were you taking these risks with my money?
Exactly.
As difficult as it is, in one hand, the banks are conservative because they're thinking these are depositors' funds.
Yeah.
Yeah. So we can't just take huge risks. If you're a very big bank and you want to take a small chunk and put it over here in something that may or may not work out, then maybe you structure it that way.
Yeah.
Standard Bank, National Bank. I think most of the banks have certain products
that cater
are
for that.
catering for more risky markets. So with some of the banks, it's specifically startups. Most of the banks, when we look at areas, customers that are not supported enough, usually you'll see these are loans to women entrepreneurs and the youth.
Okay.
Because those are customers who don't necessarily have the collateral or don't necessarily have, 3 years of financial reports or whatever it is, but they still need support.
Right.
So those are the areas where you maybe see small loans being given out to small businesses.
When you say small loans, how much are we talking about?
Also, that might be, a few million or something, as opposed to tens or hundreds of millions. But it depends. Like, depending on the capacity, so SME is quite a broad category. It could be someone who's dealing in billions.
Right.
So in some cases, it can be someone who's dealing in billions.
Yeah.
But maybe. Usually I think you're probably talking in millions rather than billions. Yeah.
Okay.
Yeah.
All right.
But no, I think you've had a bad experience with the local banks. Is that your...
Right.
Development banks will do project finance for 10 or 15 or 20 years, knowing that for the first 5 years we're not going to make any money at all.
Yeah.
But we're looking in the long term, and we have financing that will back that.
Yeah.
If I'm using people's salaries to fund a 10 or 20-year loan, of course you can have your mortgage book as a portion of your loan book.
Right.
But if you're doing long-term lending on the basis of salaries that are in and out every month, sometimes it's hard to match up those finances, whereas you have other institutions that are built to take certain types of funding that is long-term funding, and then they use that to invest for these development projects and so on. Another area where we have a lot of liquidity is the pension funds have huge amounts of money that they sit on. And then I guess they have the same risk appetite that banks do, where we're sitting on people's money. So we'll take certain types of risk, but not others.
Right.
So maybe they're not going to be putting money into startups either.
Yeah.
But it is a gap.
Yeah.
In terms of the financing that's available.
How
We're
long
talking
is your
about
average?
startups.
Go ahead.
Funding for startups.
Who should be funding startups in this economy?
Yeah.
Forget about the banks. We know what we need to fund.
Yeah.
It's when you've got, especially the previous government, when treasury bills are earning me, 25, 30%. Why should I give a loan to a guy in the streets who's got
High risk.
he's got a toothpaste company he wants to start because Malawi should, and it's true, Malawi should not be importing toothpaste.
Yeah.
But if you came to me as a banker and said, I want to build a toothpaste factory, and I know there's a market here in Malawi, and I have no competitors, and I can do this, I'll say, good for you.
Yeah.
I'm not touching that.
Yeah.
In Singapore and the Chinese model, they'll say, "Oh, okay, we're going to give the bank a guarantee so that they can de-risk it, right?" So, and government maybe will also help you with some startup funds. Oh, and by the way, we're going to look at all your competitors, the other toothpaste guys selling into here, and we're going to tax them.
Yeah.
So that your product is the one that wins.
Right.
That is like they'll find 5 guys who can do toothpaste,
Yeah.
and then they'll pit them against each other.
Ah.
And the guys who lose, they'll say, "Okay, you're not efficient," and the
Yeah.
guys who win,
You
they'll
continue.
establish themselves, and then the Chinese will eventually take the money out.
Okay.
What were we going to do when we were teenagers?
I was going to have like 5, 6 children.
Okay.
Was that one of the
But-
priorities?
That was one of the
Was that the only thing?
No, I remember you and Matthew were very big on running the central bank.
Yes.
The
Yeah.
Reserve Bank here?
Yeah.
Really?
Yeah.
Why?
Because we grew up in a central bank neighborhood.
Yeah, but what did you
And
want to do? What did you want to do with it? Did you just like the building, like me? Like I am completely in love with the central bank in Malawi.
That's a great building.
Well,
That's it. Yeah.
It's kind of, I mean, the neighborhood, a lot of us wanted to be bankers, and a lot of us ended up bankers because it was a neighborhood of bankers. And so this is what we knew.
Yeah.
This is what we identified with safety, and this is what we identified with, oh, that's what can give me the same sort of upper middle class upbringing I had. And the mental effort of, oh, maybe I'll become a chemical engineer.
Yeah. No, I've ended up doing the same. Like my dad worked in banking.
Right,
I
yeah,
actually
yeah.
ended up in the bank where he was. Like my dad was an economist, and we never really talked about it. But like it just became when I was at school, it just by default became my favorite subject and seemed the most natural thing in the world.
Same here.
And even in my day-to-day job now, the thing that I find most interesting is when I get to do economic stuff.
Yeah.
So
right.
like it's just maybe some of this stuff is not necessarily genetic, but you become attached when you see your parents do something.
Yeah.
If my dad was an engineer, then maybe my
Maybe
default
you'd be
would be
engineering.
to want to go and fix cars and things like that. Whereas it never that wouldn't come naturally to me at all.
Right.
Based on my background. So yeah. At university, my dad wanted me to do actuary science. I wanted to do journalism, and we ended up in the middle with economics.
Yeah.
So I didn't completely blow up
my
my career
God.
prospects.
So in terms of like risk, what is the biggest thing that you flag here within this economy here in Malawi?
In terms of the country risk, there's a combination of things. So, I mean, of course, the inflation is a big one because there are risks that are going to affect us directly as the bank. So I talk about something like inflation, and of course, it has an impact on our operating costs, which is your own income. But then beyond that, what it does to our customers, because the inflation is high, that hurts businesses. And then also because of the way that interest rates are set, like we have a policy rate from the central bank that is basically like the benchmark rate for the rest of the economy, and that stays high when inflation is high. As a way of trying to manage inflation, you'll have higher, usually the benchmark rate is higher than the rate of inflation, and our inflation has been so high that all the interest rates are high. Then you also have issues with fiscal policy from government. One thing that government does, if they borrow a lot at high interest rates, that will also have an impact on the rates that get offered to private sector customers. And also when government is borrowing heavily, they tend to print a lot of money. And when there's a lot of money floating around, that also contributes to inflation. Without going into too much technical economic stuff, that's one of the problems we've had in recent years. I think we were growing our money supply by 30-40% per year, and we were seeing our inflation rate at 30% as well.
Yeah.
So the current government that's come in, they're saying that they want to address these things. They want to cut down on their borrowing, cut down on their spending, tighten things up so there's less inflation. That will allow interest rates to start coming down. Also, prices won't be rising as quickly as they have been in recent years. And then everything becomes a bit more stable and predictable and easier for people to do business.
Yeah.
And it also then feeds into better salaries and more jobs and all these sorts of things. Over the medium term, that's the direction, right?
Yeah.
So then these are the things that we're talking about within the bank. So when we talk about different types of risks, interest rates are coming down, it looks like. Hopefully, for the economy, broader economy, hopefully that continues. And for us as banks,
Yeah.
we can see the medium term that might be good.
Yeah.
Like we'll have more customers, we'll be
Yeah.
able to diversify our lending, more
Yeah.
people will be able to afford the loans,
Yeah.
and therefore we'll have less bad loans.
Okay.
All that's great. But then in the short term, that might mean we're making less interest income. So then
Yeah.
we also have to manage how do we work around that.
Yeah.
You know. So there's lots of interesting conversations about those sorts of things. So the local economy is big. So the inflation, the interest rates, of course the forex is a big one. So we don't have enough exports, we import a lot, we have a trade deficit, so we don't have enough forex. So the way things work in the banking sector is generally, if you have a currency that is easily convertible because there's lots of demand for that currency outside,
Yeah.
then moving currencies in and out is very easy. So if we exported a lot,
Yeah.
then the people who are buying our goods would be trading in our currency, and therefore our currency becomes more attractive. So for example, if you've got border towns like
Yeah.
Karonga or whatever,
Yeah.
it's easy for people to be exchanging currencies because
Yeah.
the people on the other side of the border are dealing with the people on our side of the border, and it's easy, right? They have liquidity
Right.
on both sides, in both currencies.
Yeah.
The problem we have in the big picture is because we're not exporting enough, there's not that much demand for our currency from
Yeah.
other countries.
Yeah.
So for an international bank, that might make it easier for us to borrow foreign currency from other countries. But in terms of having foreign currency that you can keep,
Yeah.
then usually that's going to need to come from the local
From
market.
local market.
Because we need, what can we exchange for
Yeah.
foreign currency? We
Yeah.
can exchange kwachas. That's
Yeah.
what we have in Malawi.
Yeah.
Therefore, if we want to do a transaction with an EcoBank customer or another EcoBank country, let's say next door in Zambia, if they want Malawi kwacha, then that makes it straightforward. We can just buy
Right.
and sell currency.
Yeah.
But if we want to get dollars from them,
Yeah.
we need to give them something that they want.
Right.
And if we don't have a currency they want, then you'll end up you can do a borrowing, but you can only borrow so much.
Right.
And you can only borrow for so long.
For so long. Yeah.
So ultimately, for every bank, the foreign currency problem is a problem.
It's a real
If
problem.
our customer
You
wants
only
to,
have a buffer.
yeah. So if our customer wants to buy foreign currency
Yeah.
to import something,
Yeah.
that needs to be foreign currency that we've sourced from the market, like we've bought it.
Yeah.
Like we can borrow
Yeah.
and then give it to our customer, but then
Yeah.
we need to go and find foreign currency somewhere else
To
so that we
replace
can
that.
pay back what
Yeah.
we borrowed.
Yeah.
So you can only go so far. So yeah, you say EcoBank, Standard Bank are international banks,
Right.
but they're limited in that sense.
Okay.
You know, you can only do so much if the local market doesn't have forex.
Yeah.
So when there's less money in the NGOs, or if there aren't enough exports, or if tobacco has a bad year, all these
Yeah.
things, make it more difficult.
Yeah.
Which is why, you go to the bank and they tell you they don't have forex.
Yeah.
They're probably not lying to you.
Yeah.
Yeah, so no, that's how that works. So in terms of the size of the parallel market, I'm pretty sure that it's grown, but I couldn't tell you what the numbers are. Like,
Yeah.
there's nobody really gives you any data
Yeah.
on that sort of
Yeah.
thing. I can say the controls where I work are very tight
Okay.
because we've got 4 or 5 different control departments who are
Yeah.
keeping an eye on these things.
Yeah.
And then all of the reporting we do goes through to the group as well, where they've got lots of people sitting around looking for funny numbers. So I think it's also depends on the institution.
Yeah.
And then also I think when you're bigger and you have a lot of branches, these
Yeah.
things can be harder to control.
Yeah.
What I think sometimes can happen is you might have a case where someone is being allocated forex because there's some forex for them, and then the person they're talking to on the end of it is pretending that they're
doing
helping them or
something.
something.
Yeah.
So then that becomes, I think, maybe an HR issue.
Yeah.
So that's worrying. I think the ideal is if the customer actually submits a formal complaint. I think ultimately, like, the underlying problem, so I don't think we should have those situations. I think it's terrible, but I think the underlying problem is really the supply of forex in the
That
market.
it is really, really not there.
Like,
for real.
the central bank is trying to regulate these things very tightly as well.
Yeah.
And I have sympathy for them because it's very difficult.
Yeah.
It's impossible. So, like, I think we're at the point where we're importing more than 3 times as much as we're exporting.
Okay.
So, of course, that's not sustainable.
Yeah.
I feel quite optimistic in the medium term, though.
Yeah.
Of course, one thing that's been really good in recent years is, having this 2063 agenda with, you know, the milestones along the way. Right?
Yeah.
We have very, very clear direction on what the national priorities are and the
Okay.
focus areas.
Okay.
So in terms of the productive sectors that the previous government and now this government are talking about as their priority areas, and you
Yeah.
can see it in their budgets that these are being focus areas. So the agriculture, tourism, mining, manufacturing, and then facilitating that through, you know, infrastructure investment, roads, the energy, and so on and so forth. Everything is all joined up, and you're not having one government leaves and then everything collapses and you move in a different direction. It's all moving in one direction. I feel quite optimistic about medium-term prospects in terms of these key sectors actually delivering some change in terms of economic growth, in terms of addressing the export gap as well. The mining projects that we have in the pipeline are massive ones. I think that'll generate a lot for the economy. I mean, of course, mining agreements are very tricky, and we've seen a lot of some of our neighboring countries and countries elsewhere in Africa, you know, maybe being ripped off a little bit. So I can see that the government's taking a long time over those agreements. I hope that works out in our favor.
Yeah.
But even if you don't have perfect mining agreements, just the amount of investment that has to come into the country to enable those projects to get going, and also the amount of energy infrastructure that needs to be put in place to enable those things to get going is huge. And I have a lot of hope in terms of what that does to sort of create development, create jobs, etc. But unfortunately, that's all sort of medium term. That's maybe 2-3 years down the line. You start to really see the benefits and the fruits of these things. The next year or two might still be quite tight. There was a really good World Bank report that came out, I think, last January or February, that had a focus on the mining sector, and they were highlighting 7 or 8 big projects that they see generating billions of dollars in returns. But they were talking about this in the next 5 to 10 years once these are all fully running.
Operational, yeah.
But then, you know, in terms of some of the strategic minerals that we have, there's so much demand for them that, you know, maybe we'll see some things fast-tracked. Usually you see project timelines and you assume it'll take twice as long, but in this case, there's so much demand for what we have under the ground that maybe, you know, maybe things will happen faster. But by 2030, 2031, I'm sure we'll be seeing the benefits of some of these things.
Okay.
Of course, there's a lot of people who have to do their jobs well for all that to happen. And then even your banking sector, we have to get things right as well in terms of supporting all the companies involved. But it'll create a lot of business locally as well, you know. All the service providers and contractors who need to make all these things work. You have towns that, you know, now are fairly basic, not developed, and then you'll have huge mining projects that at points will have hundreds or thousands of people working on them. And you'll need to put in place all the hotels and restaurants and schools and other infrastructure that you need to make these people's lives livable. And then that adds so much for the, you know, for the local people. So fingers crossed. It's like if I'm in government, I'm looking at this project as something that's going to benefit my people. I want to fast track this thing. The person on the other side of the table, maybe their company can outweight me. You know, then maybe they're saying we're only going to start if you agree to give us this or that or whatever it is. As also, I'm sure there'll be lots of pushing all the decision makers. You know, we'll help you out in this way or that way if you give us more favorable terms. So I've seen the president is very serious on this one. At least everything he says is about, you know, we're not going to move until we get reasonable terms. The other side of it, though, is when you look at it as an investment for the mining company, of course, the resources and the land and everything belong to the country, ultimately. But also, if you have, say we now have a mining investment company, if that mining investment company is well resourced, what you'd ideally want is for the country to also be investing. So if you say you have a share as part of your licensing agreement, a share of the project, as the project grows, what are the terms going to be? Is your share going to stay the same, or is your share going to be bought out? And then also, if you as a country are benefiting, are you then going to put that back into the project so that you can get a bigger share for your people? And then how much of the project gets listed on the stock exchange? There were a couple of these agreements coming up in the media quite a bit a couple of years ago, and they were saying that two licenses had been issued for upcoming projects, and in both cases they'd agreed that they would have to list on the local stock exchange.
Okay.
But I don't know how much they need to list.
Yeah.
And they would have, I don't know what you call it, but they would have a period of a couple of years before
Yeah.
they list.
Yeah.
Which is not ideal for us, because
Yeah.
that means whatever they're doing is going to gain value.
Yeah.
So by the time they're listing, maybe...
Then yeah,
we
we're
only get
buying
we
when
only
it's
get
like really high.
Yeah, yeah. But, you know, I think those sorts of things need to be in there.
Yeah.
But yeah, ideally, the country should be putting whatever resources are
Yeah.
coming into
Yeah.
into our pockets
Yeah.
back into these projects, so that we can buy more control.
Yeah.
You know, there's lots of different stories about these things. There was a story about, I think it was titanium at Chipoka. I always confuse it. It's a place near Salima.
Chipoka.
Chipoka, yeah. About a big find over there. There was a story that what does MITC stand for? Investment and Trade Corporation. What is it? That they had been in China, and the Chinese wanted to invest $7 billion, I think it was, in not just extracting but also processing plant.
Okay.
So I don't know how much truth there was to it.
Yeah.
No, I don't think there was ever any formal communication from government.
Yeah.
Hopefully the find is genuine.
Yeah.
But you know, that was very exciting to hear.
Yeah.
That, you know,
they still want to invest.
that the conversation
here.
is going beyond just extraction to
Right.
also processing.
Right. Yeah.
So the idea was that they'd set up, like, they'd basically build a city or a town there, so that, you know, this is not just the
Yeah.
mining center, but
Yeah.
also the processing center.
Has the West never thought of Africa as the place to invest in, like the way they've invested in China for cheap labor?
Ah, I see. So I think it's okay. So what's the basic level of education of the population? What are the logistics in terms of transport infrastructure? What is the energy sector like? Do you actually have the infrastructure for all of this manufacturing? You know, like, I think the country that's planning to do all of this probably needs to have some of these things set up.
Yeah.
I think Malawi is very expensive in terms of logistics.
Okay.
Not just being landlocked, but we haven't really sorted out rail or ports or any of these things yet. I mean, all of these are in the plans for our development strategy, for
They've been
what you
there
see
for 100 years.
what you see in the budget. So hopefully we start to one thing that's really good in
implement
the current budget. We're still borrowing a lot, but there's a doubling of the development budget this year, and I don't know how you make sure that we're more efficient with those funds than we have been in the past. But
Yeah.
when they say development, you know, I mean, most of the budget was going into just paying salaries and all these day-to-day
Yeah.
things that aren't necessarily growing the economy.
Right.
But like now they're saying that we're going to invest a lot more than we have been previously. I hope that works out well for us. But then that's where, when you look at, say, the industrial policy now, the Ministry of Trade is talking about special economic zones and industrial parks and all these sorts of things, right? So when you talk about that, like, why don't we locally manufacture some of these goods rather
Yeah.
than having to import them from the country next door?
Yeah.
Our capacity for these things is low at this point.
Yeah.
It probably was higher maybe even 20 or 30 years ago. Like, you were doing textiles and things
Yeah,
like this locally,
right.
and now we import everything.
Right.
So you rebuild that infrastructure,
Yeah.
and then maybe a few years down the line, it's something that you're so good at that
Yeah.
maybe other people come into your country because they know Malawi is a good place to manufacture X, Y, Z.
Yeah.
But you need to start from a base.
Yeah.
You need to have roads that make it easy to move things around. If you
Yeah.
need to move things around, it needs to be easy to bring things in and out of the country. So your borders and your customs need to be efficient. My understanding is that exporting from here is very difficult. Like, you
Okay.
have all sorts of approvals that need to happen.
Yeah.
It can be a very slow process. So all those sorts of things,
Yeah.
you know. So lots of things that are not necessarily tangible, but that make the whole thing less profitable as a business venture,
Okay.
can have an impact. Like, it's one of the things the World Bank was highlighting, and they say we need to turn our economy around. We really need to export more.
Yeah.
It's not just a case of, here is the agricultural produce, here are the minerals,
Right.
and now we export them. It's like the whole process of being an exporter in Malawi
Yeah.
can be quite a challenge. Of course, you have to convert some of your forex with the central bank as well, which is
Right.
another thing that's, you know. not ideal, and hopefully that won't be permanent. But you know, it's understandable for where the country is now.
Yeah.
Yeah. But no, I mean, I'm talking circles around it. But in terms of the thing you're mentioning about manufacturing and so on, you just need to put in place certain things that make it easier to do that. And then also, if it's something that you're doing, as you know, if you're talking about foreign investors coming in and then exporting, then what are your export controls and how easy is it to move things across borders?
Yeah.
And where are these things going and where are they coming from? Like, where are the inputs coming from and where are they going? In terms of your export markets, and is it easy to transport things? So yeah, like the ports, the rail, all these sorts of things we need to fix.
Yeah.
The roads are not great, and then trucking things in and out can be a hassle as well. So the whole picture needs to be considered.
It needs to be changed or developed in that sense.
Yeah, but when you look at things on paper, in terms of the ideas, the strategies, you know, there's a lot of thought, and there are lots of people who have asked the questions you're asking, and have put down solutions for how we're going to fix it.
Executors, or is it that?
That can be a factor. Sometimes there's not effective resources there's not enough money sitting around to enable these things.
No.
Okay, there is enough money, but it's not being allocated efficiently or effectively.
Yeah,
so,
exactly.
You know, yeah. So one thing that's good also in terms of what governments say they're intending to do now is they want to digitize all of the collections and payments for all of the MDAs, right? All of the procurement as well. So if you have proper audit trails for all of the expenditure, IFMIS has been the story since, what was the...
Oh, geez.
What was the gate?
Cashgate, 2012, 2013.
And now it's 2026. So that's
over a decade.
I feel like that's not been moving, maybe because some people were benefiting from the way things were. I can't see any other reason why it takes so long, but now we're saying they're going to do it. So, okay. The tricky bit in terms of implementing some of these things is you have what the president says, you have what the Minister of Finance says, you have what the Secretary to the Treasury says, you have what the Chief Secretary to the President Cabinet says, and all these guys high up the tree are all on the same page, which is good. But then in terms of a civil service that has thousands and thousands of people working in it, you need all these guys to also be on the same page. So I think in terms of the communication, the management of that turnaround, it's a lot of work, I imagine.
Yeah.
You know? It's hard enough if you have a company of 100 people to get everyone moving in the same direction.
Right.
When you say you want to change your processes,
it's
very difficult. So I just hope that it'll all work well. You know? But yeah, that's the right direction.
Yeah.
It's the right direction.